Hello and welcome to TA for Traders. I'm Nigel Croft and it's Wednesday the 13th of September. In this short video we're going to look at two US stocks where there's been some corporate news this week. First of all, we're going to look at Workday. Now they've issued a 1 billion convertible bond, 5-year convertible bond. It had a coupon of 0.25% and was at an initial conversion premium of 37.5%. We'll have a look how that might affect the charts, and we'll also look at Portola, code PTLA. They've had a £349 million secondary offering. It went out at 55, which was a 3.4% discount to the previous close. We'll have a look at the charts there and see what we expect for the future price movement. Okay, so starting with Workday. We're on the daily chart here, so each candle represents one day. You can see that there's been a bit of indigestion on the shares as we've had this convertible offering. That's just a natural reaction to a convertible. You get a lot of the hedge funds who short the stock as the convertible is priced and as a hedge. And you can see it's drifted off. It came back to the 20-day moving average, but has since bounced into the close, but still a red bar from yesterday. The chart actually looks okay. The straight chart, we've broken out to the upside. Moving average is all looking good, and it's just a consolidation or a very short-term flag that we're seeing. On the RSI, you can see that we have lost momentum. Also, a slight concern in that the peak on the 7th of September was below that on the 30th of August. So keep your eye on that. We do want to see the spot move higher and this RSI to break that cycle, or we are going to drift below 50 and indicative of negative momentum, which might increase the downside pressure. Presently the RSI is at 54.9, so just watch that, but not a trade-in sign yet. And likewise, the MACD are tracking sideways now. The differential has narrowed to 0, so please be aware of that as well. Keep your eye on those two. On the weekly, and you can see that the move up was from its own flag formation. Were slightly overextended from the moving averages, but they all did create good golden crosses before we had a break upwards. So it's all positive. Maybe get another flag, a consolidation before the next move. Like on the daily, the RSI is losing a bit of momentum, not yet creating its own downtrend, still at 63.6, and the MACD short term is still above the long term. But they are virtually flat lining. On the 4-hour chart, and here we've pulled back below the support of the 20 yellow line. That's the 20 from the 4-hour. And the next support is at the 50-day, 105.59. Again, the RSI is in a downtrend and also had the non-confirmation that we had on the daily, so be aware of that. It's still above 50.58, but is a concern. If that doesn't tick up, do expect that support at 105.59 to be tested, with support below there at 100.92. Here the MACD has rolled down and is shouting a sell, so be aware of that. That could indicate further downside and the support's being tested. Okay, moving on to Portola Pharma. As I said, they've had a secondary this week which priced at 55. After the announcement of the share sale, the shares did bounce, although they were weak the day before as the deal was going ahead. However, we have fallen back below the 20 and the 50-day moving averages, so that is a concern. My major concern though is this key support, which is, I'll actually highlight where it is the low of the 18th of August, and it's at 52.64. Keep your eye on that level. Now the reason that's so important is that we have left a massive gap on the big move on the 23rd of June. If we fall below that support 52.64, it's indicative we're going to fill the gap. It could take time, but it would be a concern. We need to stay up there. We need to stay above. It'd be ideal if we get back above those moving averages. So be aware of that. Below the moving averages, we're vulnerable to test that support. If we fall below that support, that confirms in the downtrend. There's nothing to hold this share until we fill the gap, which would be down at around about 42.6. The RSI is showing negative momentum, 46.2. Likewise, the MACD just rolled down, they're negative as well. On the weekly, you can see the gap that we had, and you can see now we're having this flag formation. As long as the flag keeps going sideways, that's not a concern. It will allow the moving averages to catch up. Here we've still got some positive momentum, RSI 59, but we are above the 50, so that's okay, but we are in a downtrend. MACD, however, have tracked down and are a warning sign even on this weekly. And finally, on the 4 hour chart, you can see again we're back below the moving averages. When the 20 crossed the 50 on the 8th of August, the 50 was still moving up. When they're going to cross, which will be in a couple of days, the 50 is now moving down, so it would be a further bearish sign. The 200 by then will be moving up, and actually the 200 will get close to that 52.60 as support level quite over the next week. RSI is below 50, 44.31 in a shallow downtrend, and the MACD are still negative. So that's been TA for traders, having a look at Workday and Portola Pharma. I hope you found the videos of interest. Portola has got key support that must hold or it's in trouble. Be aware of that. And Workday, if there's a consolidation and moves up, it still looks okay after the indigestion from the convertible offering. Many thanks for watching the video. Please remember these videos are my opinion only and are not an investment recommendation.